Hi everyone and welcome to the Everyman Investor. So in today's video, I'll be doing something a little bit different. I'll be taking a look at EVs, the current and the future of EVs, and whether or not EVs have got a future in our automobile industry. So I'll do it as a case study of Tesla versus Toyota. Now, if you've been following the markets, you'll know that Tesla stock has been tanking recently. In fact, this is the trend over the past year. Tesla is in red. It's down 5.83% year to date. But as you can see, if you have bought it when it was really at its peak, you have lost a lot more than 5.83%. Now, Toyota, on the other hand, is up more than 50% year to date. Now, the question is, why is this happening? So let's take a look at what went wrong for Tesla. Let's talk about the metrics of Tesla and Toyota first, and then we'll go through what went wrong with Tesla. So now, Tesla had a revenue of 97 billion in 2023, a net income of 15 billion, operating margins of 15.5%, EPS of $4.3 per share, a P ratio of 44.08, no dividends, sales volume of 1.8 million cars or thereabouts. Now, Toyota, on the other hand, had revenue of 275 billion with a net income of 27.6 billion, and operating margin was lower at 9.87%. EPS was $22.50 per share, and the P ratio was 10.06, and the dividend yield is 1.77% at its current price, and the sales volume was 11.2 million. Now, as you can see, Tesla, which is the current EV so-called leader, although it has since been overtaken by BYD, which is from China, actually made less in terms of revenue and net income. Although its sales volume is actually a lot lower than Toyota's, meaning to say that its margins was higher. The thing is that Tesla's margins are currently under pressure because in order to keep up with the competition, Tesla has had to cut prices pretty much worldwide, especially in China, where it's facing a lot of competition. Now, in terms of the EPS and the PE ratio, you can see that Tesla is about 4.5 times more expensive in terms of its price to earnings ratio than Toyota. And this valuation itself can be an issue. And Toyota has paid a pretty consistent dividend, and it has raised its dividend sometimes. It's currently yielding 1.77%, which is, well, not great, but not too bad as well. So, what went wrong with Tesla? So, initially, there was a big EV craze last year because of the oil prices going up, leading to gasoline prices going up. Now, oil prices have declined since, and they have stabilized around $70 to $80. And the wait times for Teslas or for EVs in general has been pretty much about at least 3 to 6 months, depending on which country you're in. Some countries are even saying up to a year in some retailers. So there is the question of whether or not you want to buy a more expensive vehicle. So EVs in general are much more expensive than hybrids or internal combustion engine vehicles for a simple reason. The battery metals are expensive, and hence the cost needs to be passed through to the customers. Now, there's increasing competition from cheaper EVs, mainly in China. So BYD is now the leading EV seller worldwide, which was what Tesla was previously. BYD overtook Tesla this year. The reason why China EVs are cheaper is simply because China controls many of the battery materials supply chains, which is why many Western countries are trying to get their supply chains in the West rather than to rely on China's exports. The third problem is that current supercharging infrastructure is inadequate. Now, so for Tesla's batteries in their cars, you need an optimal temperature for charging, which is what I mentioned a few videos back, where cars in cold weather could not be charged, Tesla vehicles. This was a major problem because if you cannot charge your vehicle, you cannot go anywhere. Then the second problem is that you need a 15-minute charge for 200 miles or about 322 kilometers range per Tesla's sort of metrics. And you need a 50 to 60 minutes at a supercharger for a full charge on Tesla's battery. This is not something that is, shall we say, financially, infrastructurally sensible in the sense that you can't build so many supercharging stations for a car to basically sit down there for an hour or so. Now, the advice is usually charge at home, but charging at home takes about the whole night, overnight charge to get the battery charge to full charge. And the range of the current EVs, because of the battery technology, is much lower than what it can be in the future. Um, Various vehicles have got various various range metrics, but there have been reports from drivers that a lot of times the range is actually overestimated compared to real life driving conditions. Another problem is the valuation versus other automobile companies. So, as a pure vehicle company, Tesla is really overvalued. In fact, Toyota's PE ratio is a lot higher. Well, not a lot higher, but higher than companies like GE and Ford, for example, which trade at much lower multiples. Now, Tesla basically wants to be a tech company rather than an automobile company, and there are a couple of innovations that basically Elon Musk has said that makes Tesla a tech company, which would justify it trading at its current PE ratio. Now, the first one is this so-called AI robot, which is Optimus. The initial demonstration was somewhat underwhelming. If you haven't seen it, you can go and Google it, YouTube it, or something. It was not impressive at all. And then there is AI. So Tesla basically has got AI called Dojo, which basically helps collect data, analyze data. It's supposed to help in the self-driving technology. Now, whether or not Dojo can be used in other sort of circumstances, or whether it can be used in other ways, is something that has not been explored yet. Now, what did Toyota get right? So Toyota basically took a diversified approach to vehicle manufacturing compared to Tesla. So Tesla went all in EVs and basically abandoned every other single thing. Now Toyota basically has got its legacy internal combustion engine business, plus it has got its hybrids. It has also got pure EVs, and it's also in sort of research and development for hydrogen vehicles. So the Toyota CEO actually recently announced that he doesn't think pure EVs will make up more than 30% of vehicle sales in the future, and that there will be a role for all these different kinds of vehicles depending on the person who's buying it and what the person is using it for. Now, the main thing is that Toyota went big on hybrids, which are greener than your normal internal combustion engine cars, but they are reliable in the sense that even if you run out of battery charge for your hybrid part battery, there is still the gasoline engine that you can use, and you can fill up at gas stations for basically pretty much unlimited range instead of having to look for a supercharger if you are at the limits of your range. Now, Toyota actually has not given up on EVs. In fact, it is planning to roll out EVs somewhere in the region of 2026, 2027 in conjunction with new battery technology. So the current lithium-ion battery has got limitations, as I mentioned in the previous slide with Tesla. Tesla has basically decided to go all in on improving lithium-ion batteries. Now, Toyota, on the other hand, is doing what we call solid-state batteries, which is basically what they claim to be the future of EVs. So the difference between solid-state batteries and the current lithium-ion batteries is that it degrades slower, it holds a much larger charge, meaning to say it can power your vehicle for a much longer distance, and it charges a lot faster than the current lithium-ion batteries. So a full charge at a supercharger takes 10 minutes for 745 miles or 1,200 kilometers, which is basically quite incredible. So think of it this way. When you fill up at a gas station, it will take you approximately 10 minutes anyway, which means to say that a 10-minute supercharge at a supercharging station actually makes a lot of sense rather than an hour of charging in the case of a Tesla. And Toyota is by far the leader of solid-state battery innovation. So what Toyota's idea is that it's planning to introduce its EVs with these new batteries because it does not think that current lithium-ion batteries are suitable in terms of providing excellent performance for electrical vehicles. And based on what has been reported about Tesla's over the winter in the US, it seems that Toyota has pretty much got it spot on. And the demand for hybrids is actually increasing because people want to feel good about driving a green car, but they also want to have a reliable car that has a backup engine in case they run out of electrical energy. So this is from global data. As you can see, Toyota actually dominates in solid-state battery innovation. The number of patents that Toyota has in solid-state battery innovation is 8,200 compared to the second-ranked LG, which has got 5,500. You can see Tesla is not on the list here at all for the simple reason Tesla is not invested at all in solid-state battery innovation. In fact, Elon Musk thinks solid-state battery is not something that he's even thinking about. So a lot of actually car manufacturers are actually partnered with various electrical companies to try and produce a solid state battery. And as you can see, the leader in terms of patents will be Toyota. It's partnered with a non-listed company in the US. It's not partnered with a company that's not listed in the US. You can buy it over the counter. I couldn't, which is the reason why I bought Toyota in the first place. The patents are jointly filed. So the conclusion. So Toyota to me is a lower risk, lower reward stock in the sense that it goes up nicely as its earnings grow, and the risk of it failing in terms of the solid state battery innovation is there, but at the same time it's got its legacy internal combustion engine and hybrid vehicles to fall back on should the solid state battery and hydrogen cars fail. That being said, I do not think that failure is very likely. Toyota has been consistently building up its technology in terms of the battery technology, and it is starting to outfit its factories with battery manufacturing and battery packing lines so that it can start as soon as they are satisfied with the solid state battery's performance. Now, in terms of future innovation, the EV as it is, in my view, is basically at pretty much the limits of its innovation. How much more can lithium-ion batteries be improved? I think that given that Tesla is struggling now to produce EVs that basically show further innovations compared to just cutting costs, it's a sign that the current lithium-ion batteries are basically stuck as it is at the moment in time. So Toyota basically has got these hydrogen cars that are running around on the roads at the moment in time, but it's all in experimental stages, and they're actually hydrogen-powered vehicles, mainly large vehicles, that are actually on the roads at the moment. Now, hydrogen is an interesting option for cars in the sense that it stores more energy than gasoline. There are various problems with hydrogen as a fuel, which I won't go through in detail. But the thing is, there are various innovations underway to try and fix those problems. Then for solid-state batteries, as I mentioned, a 10-minute full charge at a filling station or supercharger station is pretty much the same as driving into a gas station and filling up with gasoline at the moment in time. And current petrol stations can potentially be converted to supercharging stations if you only need a 10-minute full charge for your batteries, or they can even convert their gasoline pumps to hydrogen pumps, which has got, again, issues in terms of conversion, but it is potentially possible. Now, for transparency's sake, I actually bought Toyota initially. I bought a quarter portion worth of Toyota mainly because I wanted to take a gamble on the solid-state battery innovation that it has. And then in its dip in December, I actually bought a full position size. Bear in mind that my position sizes are not in the range of tens or hundreds of thousands. I am just a normal worker earning a salary, so it's a few $1,000s worth in terms of positions. And I've got about 14 active positions at the moment in time. So it is something that I think is a lot more, shall we say, potentially profit making than to buy Tesla now, although Tesla shares have dropped quite significantly since its previous highs. At the same time, Toyota pays a dividend as well, which is pretty good. And the current innovations and the sort of announcements Toyota has made in its recent earnings reports seem to show that the management is very confident that this is going to be the way forward for the future. But, so, as an informed investor, there is always two sides to the coin. Can Tesla turn around? So the answer is it could potentially turn around. So what happens is that Tesla can potentially adopt solid state batteries, or it could sort of invest in other battery innovations that can improve the performance and the range of its current EVs. Then there is AI robotics innovations. As I mentioned before, it is currently not doing very well, but Elon says that they are going to be a AI robotics company. So if they actually do manage to produce a good AI robot, imagine a robot doing your chores for you, cooking for you, or even working in, say, production lines, Tesla will indeed be trading, should indeed be trading as a tech company rather than a automobile company. And then there's the potential of Dojo becoming an AI chatbot or assistant in much the same way as ChatGPT is now. So in this case, I would say that the current EVs are sort of, to me, at the limits of their innovation, and the next step forward will be to improve affordability, which is going to happen as more production of battery materials comes online in the next few years, which basically oversupply will lead to a drop in prices, and if the prices for battery materials drop, then the prices of EVs will drop. Then there is the range issue and the charging issue, which solid-state batteries will pretty much fix. And that, to me, is the future of EVs. And also, it will reward the companies that are invested in that technology and that produce a vehicle that can run on that technology. At the same time, the current or the ex-leader in EV innovations, Tesla, has got potential in other innovations, although it may not be in the automobile area. So you might want to take a deeper dive if you're interested in buying Tesla, as to whether how its robotic innovation and its AI innovations are coming along. So thank you for watching, and I hope you enjoyed the video. It is a rather in-depth discussion, in the sense that that's how I pretty much do my research before I actually buy a stock. I do not know as much about Tesla as I do know about Toyota, because when I screened through Tesla, it did not strike me as a company that I would want to invest in, whereas Toyota did strike me as a potentially interesting company. And as I mentioned, I increased my position just in December, as its earnings progressively came about, and as its investor presentations came about, and I saw that it was making solid progress along its innovations. Um, I hope this video helps you understand a bit better about the current sort of investments in EVs, and also will help you if you're looking into investing in EVs, and help you as you try and look through companies to find which company you think is the best bet for investing in the future of electrical vehicles. So thank you for watching. See you soon, and a happy Lunar New Year to everyone who celebrates Lunar New Year.